Well, good morning, traders and investors. My name is Roger Scott. I'm the head trader for WealthPress. Today is Wednesday, July 15th. No, I have no idea where the last 2 weeks have gone. I have no idea where the year has gone. All I remember was celebrating New Year's and thinking it would be nice to have summer here, and here we are. I don't know where this year is going. I really don't know. I think it may be because of all these things going on. COVID-19, it's a change of pace, possibly. I don't know, but the year is just going by too fast. I went to dinner with somebody last night, and they moved here a month ago, exactly a month ago, and they asked me, how long do you think I've been here? And I said, about 10 days. So my timing has just been terrible. But as I always say, let's get into the market. Now, before I get into the global news, just want to let you know where banks stand. We had big bank earnings over the last few days, beginning of this week. Earnings officially started. Unofficially, they started about 2 weeks ago, but officially they started beginning of this week. We've had a couple of banks. We've had Chase or JP Morgan. We've had Wells Fargo and another bank. I think it was UBS Bank come out, but there was three banks. Two of the banks were better than expected. The third bank, Wells Fargo, was worse than expected. So, and quite substantially worse than expected. And the theme again, while economy's coming along, certain sectors are recovering, the bottom line is this. Everybody's watching out for COVID-19. That's the biggest trigger. So let's talk about global economy. And then today is Wednesday. I'm going to talk about pullbacks. I'm seeing some pullback opportunities that you need to be aware of. So shares rose Wednesday as investors took heart from news that experimental COVID-19 vaccine has revved up people's immune systems as desired. That's great. Benchmarks in Paris, Frankfurt, Tokyo, U.S. futures also saw solid gains. Too early in the morning, suggesting that we can have a rise today. And I'm already looking at the market pre-open, and it looks very promising. Focus was on news that scientists will soon begin a 30-person study to see if the experimental vaccine developed by Moderna and the U.S. National Institute of Health is strong enough to protect against COVID-19. That would be great. Now, earnings are taking center stage right now, but honestly, everybody's thinking about COVID-19. If COVID-19 passed us, I think Wall Street would turn into a whole new picture, and this shadow looming over us would disappear. Central banks acknowledged very high uncertainty over the outlook of the world's third largest economy. The bank's growth forecast for the year, and this is Tokyo we're talking about, was downgraded to minus 5.7 from the earlier forecast of minus 5, minus 3. Hong Kong's Hang Seng was nearly unchanged, while the Hang Seng Composite Index slipped 1.6%. President Trump signed a bill and an executive order that he said will hold China accountable for its oppression against the people in Hong Kong. And again, I honestly think I'm not that political. I like President Trump. I think he's moving things in the right direction. But I wish he would just stop with this China thing till COVID-19 was more stable. Because the markets, the global economy is not stable. And putting more stress on it right now is only going to take longer for things to resolve. And again, crude oil is back up to above $40 a barrel. That's very, very important. And that's something we need to pay attention to, because that's telling us oil companies are no longer bleeding cash day and night. Now, today we have the industrial production number. That's going to be very important, because that's going to let us know if big companies, industrial companies in U.S. are picking up. I know for a fact that manufacturing is picking up, and I know for a fact that mortgage applications are going through the roof right now. We're at the highest level since last year. Interest rates are low, and the Fed told us we're going to keep interest rates low for the next year and a half, possibly, maybe even all the way till the end of 2022. So most investors, traders, and consumers are going out, refinancing their homes or buying their homes, and a lot of people are moving from very big congested communities to small areas in small parts of the country to avoid COVID-19. So there's a lot of shuffling with real estate right now. And that's very, very positive, for mortgage applications. So we are seeing an uptick, which means companies that provide loan originators like PennyMac, other companies are going to do really, really well. The biggest report comes out tomorrow, jobless claims and housing starts. Those are going to be the biggest ones. But the report that I'm looking for, the big report that it's on my horizon, is retail sales. Why? Because retail sales account for 75% of the economy. So the consensus is 5.2%. Let's just read this. Retail sales soared past expectations with a 17% monthly surge. That's very, very positive. But let's see what happens this month. The consensus is 5.2%. I would love to see something above 5.2%. 5.5%, 6%, anything above 5.2% is kosher. That means things are looking better. That means there's something for the GDP to do. As you can see here, let me just read this to you. Essentially, retail sales covered the durables and non-durable portion of consumer spending. Consumer spending typically accounts for about 2/3 of the GDP, and that's what I just said a minute ago. 2/3, about 70%. So you really need to pay attention to retail sales. Why? Because GDP is the biggest quarterly report, and that's telling us whether the engine is humming along well. And if retail sales are lower than expected, that's going to have an impact on the GDP. Also, another big report is jobless claims, and the jobless claims expectation tomorrow. Again, as long as we're below the 1.437 moving average, the 4-week moving average, we should be okay. Anything below this number, I like the consensus 1.28 million. Anything below, you see the consensus range is below the moving average, but anything below the 1.4 million, we should be okay. Now, today is Wednesday, and the market pulled back the last few days, and we got some juicy pullbacks. So let me show you some stocks that I'm looking at right now. We got Billy, not a bad little pullback reversal. We got YY, which is Joy. We got ESTC. We got Build.com, Build.com Holdings, which I like. And we got Paylocity Holdings. So out of all of these, the two that I really, really like, I like Etsy, ETSY, and I like Bill, B-I-L-L. Now, for Etsy, I would put a buy stop right around the 105. I would put a buy stop at the 106 level, and I would ride my profit till about the 115 level, and I would put a stop loss right below the swing low, right around the 98.50 level. So let's review. We'd get in at about 106. Our stop loss would be right around the 98.60 level, and our profit target would be right around the 117 level. For Bill, I would go long around, I would say right around 85.25-ish, 85.25 to 85.50. I would put a stop loss around 77, and my profit target would be right around the $95.50 area. So again, Etsy and Bill for pullbacks. I like those two quite a bit, and check those stocks out. Those are good low-risk pullback trades. Etsy is actually one of the strongest stocks right now. So folks, I got something important to tell you today. The global crisis has left a lot of things up to chance, but I'm certain that this rising stock that I'm looking at could be explosive. I mean explosive. I want to give you the exact stock that's likely to make today's traders $3,680 or more in 10 trading sessions. Now, I've already predicted a 66.10% return on this one stock, and I've got a feeling this one's going to be even hotter. If we can get this Moderna experiment to tell us that COVID-19 is out, the things we can expect from this stock market, especially with the $2.2 trillion the Fed has putting in, good times ahead. Folks, I've got a really good feeling about this stock. $3,680 in 10 days, 66.1% return in 10 days. Click the link below or the button at the end of this video, get all the details. I am certain that this rising stock that I'm looking at could explode. 66% opportunity on the upside in 10 trading sessions, a possibility to make $3,680. You can't afford to miss it. Follow the link below or the button at the end of this video. I'll talk to you guys soon, and have a great day ahead. Bye.